Morning, guys. What's up, Marty? Um, I'm a couple minutes early. I know. Ron, the pirate trade. Horror. Hey, Andy. Nice to see you. Hope everyone's doing well today. Ron, how'd you play yesterday? Did you go get 18 in? Slingshot and a pool cue, I hope. Makes it easier. Good morning, Erla. 84. Very nice. I've got finally my first tee time since I moved back to Austin, so I'm gonna go play a little golf at noon out in the hill country. Should be nice. 66 and sunny here, so hard to go wrong with that. 84. I would kill for an 84. I'm usually about 10 higher than that. Every now and then I sneak into the 80s. 8 of us today. Man, it's the 19th. Tomorrow's the last day before Christmas break, guys. It's a good day to ask a bunch of questions. News was kind of a dud today. At 8:30 a.m. we had some high impact stuff going on. Hey, Jeffrey. And it really didn't move the market a whole lot, to be honest with you, but it had the potential to. 10 a.m. we have existing home sales. It could be a mover. I like to be aware anytime I see medium or high impact news. And then, I don't know if you guys watched FOMC yesterday. I left. I walked away. And when I came back and was back in front of my computer at 3, what time was it? It was about 3 o'clock Central. It was still going. It was still moving crazy. And you know, I have this rule, guys. I'm going to be honest with you. I have this rule. Don't trade FOMC. There's so much psycho that happens before it as well. Yesterday was the worst trading day I've had in a week and a half. I took 4 perfect rules met trades, but because of the emotional response coming from the FOMC, I took 4 losers in a row. And I said, whoa, I got to stop. Guys, losers happen. It's a part of it. I knew better. But I did it anyway. I was feeling invincible, I suppose. So that was a $1,000 lesson for me. Hopefully I learned it that time. But I shared that with you because I'm going to tell you right now, you guys will have to learn the same lessons repeatedly. We all do. I've never met anybody gifted enough to take a punch in the nose and then not repeat the behavior at some time. So we're going to try to avoid it. Everything that I'm talking about today, it is going to come from the Nexgen page. I go to great lengths to make sure that there's no secrets from you guys. I don't give you everything because that would take years. But what I do is I give you the promise that you'll have enough to be successful with the software, to be consistent with the software. There goes your... Yeah, Ron. Man, and she was ready to get on the plane too. So, bummer. Guys, we focus really on one thing every morning. And there's a reason. There's a definite reason that I only focused on this one thing. It's a trend trade. That's all it is. It's not being the first one in or the last one out. It's not catching every swing. It's not doing everything, guys. It's taking the absolute best. Hey, good morning, Trina Boy. And guys, the absolute best is also, coincidentally, the absolute easiest. Hey, Steve. This high probability trade, as it's taught in this room every morning for the first hour, is a trade that typically wins 70 to 80% of the time. It's a trade that, because of that win percentage, it creates some confidence. You begin to develop trust in the methodology as you study it. But ultimately, what it does for you, and the reason that Nexgen introduces it first, is because it's going to teach you to read your indicators. And that's all that you need to learn, really, is you need to learn how to look at your charts and understand what this amazing software is telling you. Good morning, Jeffrey. Because chart reading your indicators, looking at your chart and just making decisions, guys, this is 90% of the day. Hey, Joel, 90% of the day is really doing nothing. It's sitting on your hands. It's waiting for advantages. It's exercising patience. Because 90% of the day, you don't have the advantages that you need to hopefully feel good about risking your money. But that 10%, that magical 10%, guys, that's when everything comes together. That's when the advantages are in place. And that's when you're pulling the trigger, because you know that you're trading a pattern that has been proven to win more than it loses. So that's what I teach in here, guys. I teach patterns. That's all it is. Once you begin to get comfortable reading your indicators, once you begin to recognize a couple advantages, you're going to understand where the market is likely to continue. You're going to use this likely to continue zone or point as an entry. Initially for the highest probability trend trade. Ultimately, you'll find other ways to get into the market with a few advantages. You're going to understand where the market is likely to go. This is going to help you with setting profit targets. And then finally, you're going to understand where the market is likely to stop. And this is, this was the thorn in my side forever, because it's very easy. It's very easy to understand where the market is likely to stop. You see it like a neon sign in the distance, and you're going to have to make the choice not to trade into these termination conditions, as we like to call them. Let's go to laser printer. Pew pew, pointer. So this high probability trend trade is 3 rules. So Jeffrey, Bob, Trinaboy, you guys that are new, you guys that are getting into this, I want you to be okay with the idea that you're going to take a week or two to not look for trades, but rather you're going to learn to talk to yourself in terms of advantages. You're going to be able to say to yourself, I have this advantage, and now that I have it with this one, I need to look for an entry. So these 3 rules for the high probability trend trade, when they're true, they create 3 advantages. The advantages are in yellow, and that happens to be the recipe for a trade. So rule number 1 will give me the advantage of momentum. And when I talk about momentum, when I talk about strong triggers, guys, this is the look that can push a market in the direction of the trend. And this is a look that can break key Fibonacci areas. And this is really the advantage that covers up some of the mistakes that we're prone to make as new users. Once I have it, then I go to the next rule. And the next rule says terminations false. And that I need to have room to profit targets. That's when you have to choose not to trade into these areas that have the potential to stop the market. And that'll give you a clear path. And when I talk about momentum and a clear path, I'd like you guys to picture a semi loaded up, and it's going down the highway at 100 miles an hour. And it's hard to stop, guys. With nothing in the way, it's not hitting the brakes. Once you have momentum and clear path, once you understand these 2 rules, you really do have everything that you need to create a very consistent, a very profitable trading plan. Initially, we're going to take advantage of it, and we're going to find an entry area. We're going to let rule number 3 put us into the highest probability trend trade that you can take. And I say it every day, this is not your first or your only trade. This is your first trade. And what you're doing with your ability to recognize these advantages is you're laying down the solid foundation that's going to carry you through trading for the rest of your life. And it's cool how it happens. So these 3 rules happen on 2 charts. There's a big chart and a little chart, large chart, small chart. And each chart has a very definitive role. It's there for a reason. Your large chart leads the way. Your large chart is going to define the direction of the market, which direction you should be trading. Should I be trading up or down? Long or short? It will identify the momentum in the market, and that's rule number 1 coming into play. And it'll define the areas where there could be problems, and that's rule number 2, giving you the clear path. So when I say the large chart leads the way, guys, literally it covers 66% of the advantages for the highest probability trend trade. It gives you the most information to tell you it's time to look for an entry, guys. And once those first 2 rules are true on the large chart, and it happens on this bar, the most current bar, 1 bar worth of information, 26 ticks potentially worth of information, tells you that you should be trading up, that you have momentum, that your path is clear, go look for an entry. And that's when you're going to go to the small chart. And it refines that very broad stroke of the brush that the large chart is. Inside of that one bar on the large chart is typically 15 to 30 bars on a smaller, faster chart. You'll see retracements, you'll see bounces, you'll see areas, you'll see triggers, guys. And we use this refinement chart to pinpoint the best of the best spot for entry. This is where the precision comes in this methodology, is you are literally going to understand where the market is most likely to continue with the trend. Rule number 3 puts you in at that point, and that reduces risk, and that maximizes your profit potential. We use the two charts. This is a great analogy because you can ask yourself, who am I trading with? Who am I trading against, guys? And it's mob mentality. The large chart is the large crowd. And they define trends, and they create momentum, and they react. They make decisions at those key areas. The small crowd loves to fight the large crowd, and they give these little retracements, these little shoves, these little pushes. They fight, but they lose about 75% of the time. And rule number 3 pinpoints where their failure is most imminent, and that's your entry. And if they're losing 75% of the time, guys, you have the potential to win 70 to 80% of the time. So remember who you're trading with, and remember who you're trading against, guys. And fighting the large chart is one of the worst ways to try to make money. Andy, since you're proving your prop firm, you have reduced your goals to $75,000 a year, $300 a day. You may take off another hundy later, only if looks are stellar. Right on. I like that. You're learning how to get paid right now, right, Andy? Instead of trying to make all the money, you're trying to make consistent money. And guys, once you can make consistent money, once you're comfortable with your plan, there's a lot more money to be made. But if you can't make a little, why are you putting the pressure on yourself to make a lot? Just throwing that out there. I love that, Andy. Good stuff. And thanks for sharing. I like it when you guys share your plans and what you're doing and what you're looking for. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. I say when it's okay to trade because I really want you guys to get into the mindset. The only way I'm going to take a trade, the only way I'm going to enter the market is if my rules are met, because my rules have been proven, they've been back tested, they've been verified, they've been validated, and I know that when I follow my rules win more than they lose. And guys, that's what it's about, winning more than you lose. But losing is a part of it, right? And Andy, you've learned how to lose. Guys, learning how to lose is tough because it hurts, it stings a little bit. You're going to learn how to take the correct losers, how to take acceptable losses, and how to avoid losses that should never happen. So you guys have the ability to simulate. When you demo with Nexgen, you've got NinjaTrader 8, you've got a 100% complete working copy of the software. I'm going to give you rules, I'm going to give you a plan, I'm going to teach you how to study, I'm going to show you where to find answers, I'm going to give you answers. And the step-by-step path to becoming a confident trader ASAP, it starts with posting in the room, guys. So if you're simulating, don't put the pressure on yourself to be great right out of the gates, right? Be cool making mistakes. Be all right making mistakes. But what I need you to do is I need you to show me. I need you to show me what you're doing. So 15 hours every week, I'm live. 15 hours every week, I'm here for feedback. 15 hours every week. My sole purpose in life is to look at your chart and help you understand what you did right and what you did wrong. So to get the best feedback, I like to share this in the room, guys. This isn't for me. I'm going to tell you right now, I can look at your charts and your entries and your exits, and I can probably write a dissertation on what was going on in your mind, what you thought you saw, what you thought you felt, what you thought was happening. But you need to make sure that those are accurate. You need to make sure that your chart reads are accurate. You want to make sure that your entries give you the least amount of risk. You want to be positive that your exits make sense, that you're not holding for moves that there's no potential for. And that's really kind of the magic of what Nexgen does, guys, is we don't give you software and say good luck. We say, hey, let me give you a plan. Let me teach you how to follow it. And now I want you to show me everything you do so that I can make sure that you're reading your indicators right. So to get the best feedback, I want you to annotate every chart that you post in this room. I want you to go back to those 3 advantages. I want you to talk about momentum. I would like you to talk about whether or not you had a clear path. And I really want to see where you entered and where you exited, guys, because there is a metric ton of information between those 2 points. And every time you post in the room, it's a private session with me. You and I are going to look at what you did great, what needs help, and we're going to come up with a plan together to fix anything that needs fixing. You need to make sure what's going on in your mind is accurate. That's why you got to let it spill out onto your charts. So that's the first step, guys. Take advantage of having me in this room. Take advantage of the instant feedback. Take advantage of never having to wonder. All you have to do is ask, you will get answers. And then we're going to simplify. I'm going to give you a plan with 2 trades on it, but we're only going to talk about the first trade in the first hour, guys. You've got to learn what looks you're going to commit to. You've got to learn them so that they become easy, because once you understand what the pattern looks like, it's like the market slows down. Once you understand what it is you're looking for, it really becomes easy to find. So that's the second piece to getting to where you want to be ASAP, and that's using the spreadsheet. And I give the spreadsheet out every day, and I'm giving it to you right now. The first tab is nothing more than a trade journal where you're going to put in your trades, talk about your advantages, what happened. But the most important part about this first page is the feedback from class. Because we all have a thing. Like, we all do something that hurts us, if that makes sense. For me, it was trading in determination conditions. That's why I put this 3 times in a row. Because it took me participating in class when my brother taught the class. It took me posting pictures and hearing him tell me, really for quite a while, Mark, you keep trading in determination conditions. Every time you take a trade into one of these lines, you're more likely to lose than win. They'll break, but they'll break less often. Mark, that's what you need to fix. Here's how you do it. And he gave me a plan. And that's what I'm going to do for you guys. So when you come back and you start taking these, when you start looking at these trades, when you start taking these trades, when you start getting that feedback, is Brett a new one? Welcome, Brett. We got a couple new people in here. I love it. We got Gary, Bronco Gary. Brett, new name. I like it. Who else is new in here? Trina Boy's in here. He's pretty new. Jeffrey, you still get to be new. Guys, this is your class. I love it. Every day I want you to go back to the spreadsheet and I want you to ask yourself 2 questions about the trades that you're looking at. You're looking at what you did yesterday, the day before. What worked and what didn't work? What felt easy and what felt forced, guys? In this little study each morning, hey, good morning, Adriana. You're new to class? You are. Every day you're new. This little study every day, guys, it sets you up for the day. And it really does. It accelerates the learning process. But we're learning looks. We're learning patterns. So your second tab, hey, welcome. I love this, all the new people. Welcome, Walters. The second page, and new users, this is where the dividends are getting paid. In green, these are what it looks like to have your rules met individually. Because that's the goal, is to take 3 advantages and turn them into a trade. Not to take a trade and then hope it had 3 advantages. So strong triggers, clear path, entry. That's exactly what they are. Exactly what they are. Yeah, hey, wait a second, Walter. That took me a second. And then the red section is weak triggers, guys. And the red section is termination conditions, what it looks like to not have your rules met. You should know the difference between the 2 because having them met is what gets you into the trade. And then the third tab is the client trades. And this is where you guys do really outstanding things with the software. You drop them into the room, you share them, you put them in here for feedback. And man, when it's a rule follower, when it has those advantages, I love to steal them and put them in here and give all my new people a study guide, something to go look at to learn these patterns. And what you'll find in here, guys, is there's a lot of high probability trend trades. There's some medium probability trend trades in there, guys. And one of the things, and I want to stress this, is there's some high probability trend trades in this study guide that didn't work, that took losers. But because the 3 advantages were there, the pattern remains the same. And I did that because I don't fear losers. I don't get upset about losers. Losers don't make me upset. They're a normal part of a positive equity curve. and they are a cost of doing business. Anything that wins 70 to 80% of the time, it will lose 20 to 30, which is where consistency is key. There's the entry sequences, both long and short, for the high probability trend trade. We're going to learn how to pinpoint exactly where our entry is. There's management ideas, there's patterns that repeat themselves. And then some of you guys want to trade the NASDAQ, and I love that. I trade the NASDAQ exclusively. But if you can't read your charts quickly, the NASDAQ will chew you up and spit you out. It is a fast temperamental market. And then the final one is where you're going to build your plan. This is where you're going to take your pictures, guys. The more pictures you take, the more charts you annotate, the quicker you're going to get to where you want to be. That is my Scout's honor, hand in the air promise to you. The more pictures you take and the more charts you annotate, the more times you do that, you're going to get to where you want to be faster, especially if you drop them in the room for feedback. So this is where you're going to build your plan. So we're going to go through the process, guys. I'm going to give you everything you need. Everything that you need to be successful with the software. The only thing that Nexgen cannot provide you, we haven't figured out how to bottle it yet, is experience, is the repetition to create recognition. But I'm going to give you the path on how to do that. And I want you to take advantage of having me here. I want you to feel like it's just the two of us, and you should ask every question on your mind. You can't ask too many questions. So we're going to start. And we're going to start at rule number 1 because it seems appropriate. And do I trade the opening of the market? I don't, Gary, because I'm teaching you guys. I trade pre-market. I trade after this classroom. So I trade after the lunch break. There are a lot of people that do, and there's a lot of people that just don't feel comfortable doing it because they know that there's that potential for a little bit of excitement right at the opening. And everyone's different with that one. But me personally, I don't trade during class. Sometimes I'll simulate with you guys, but I won't. Personally, I'm just never there in front of it. So that was a pretty bad answer, wasn't it? I know there's people in this room that won't, and I know that there's people in this room that will. So you'll have to figure out what works best for you. Guys, rule number 1 says strong triggers on the large chart. Large chart must have strong triggers. In order to have strong triggers, you have to be trading with the trend on the large chart. And trend is pretty easy. If it's green, the market's going up. If it's red, the market's going down. I think the best decision you can make is to choose to go with the trend. The trend is your friend. It's been a cliche for decades. Once you establish which direction you should be trading, in an uptrend, strong triggers means that your small triggers, the solid lines, are above the large triggers, the green lines, or the dashed lines. To have them strong, both must be green, the same color as the background. But what makes them strong is that separation between the small and large, that gap that's created between the two moving averages. I like to picture scissors that are open, guys. And when my scissors are open, whether it is an uptrend or when the smalls are below the large and the scissors are open in a downtrend, good morning, Miss Cindy. Guys, this is when the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is what you're going to hear in this classroom all day long. You're going to see it written on charts, OFM. And odds favorable momentum is that look that pushes a market. And odds favorable momentum can break those key Fibonacci areas. It can cover mistakes. And when I have odds favorable momentum up, that's when I'm really looking to buy Fibonacci support on that smaller, faster chart. That 1 bar event that gives it to me, sometimes those bars spring a tail or a wick. You're going to use rule number 3 to pinpoint where that tail is most likely to form. That's going to become your entry for the highest probability trend trade. In that downtrend with those strong triggers, you're going to be able to pinpoint where the top of that tail is most likely to form using rule number 3. And you can go back and use this to actually study the look, to go prove it, to validate it, to build trust in it. So strong triggers lead the way. Strong triggers make us happy. Strong triggers are the things that make children sing about, you guys. And they look just like that. Strength to the upside, even strength to the downside. The look is universal, no matter what chart you're on, no matter what, if it can be a Renko chart, it could be a market flow chart, it could be a day chart, it could be a month chart, heck, it might be a stock chart. But guys, strength is always strength. And then there's got to be the opposite. There has to be the red flag that says, hey, the advantage isn't there. When your small triggers work their way back inside of the large triggers, this is a weakening. This is a visual that the trend is slowing, guys. And when I have weakened triggers, anything can happen up or down. And when anything can happen, very often it does. This is where bigger, deeper retracements happen. This is where Fibonacci areas are more likely to stop the market. And guys, these anything can happen triggers just literally yank the advantage right out. So let's take a look. There's those weak anything can happen triggers right at a fib. And look what happened. The fib created a giant retracement. There's those weak anything can happen triggers, and there's a giant retracement. There's no momentum because the colors don't match, and a big retracement right off the fib. So guys, you're going to go back and you're going to study this look, and you're going to say to yourself, well, last time I had weak triggers at a fib, it created a big retracement. Perhaps trading into a fib with weak triggers isn't my highest chance of success. And that's what you're going to do. You're going to talk out loud about advantages. And guys, odds favorable momentum, it happens and then it doesn't. And it's there and then it's not. This is a 4-hour snippet from crude oil. Down at the bottom left, anything can happen triggers. That's where the reversal came from. And this is even without the benefit of Fibonacci, without the benefit of any of the areas, guys. Weak triggers, there's the reversal. The reversal creates odds favorable momentum. There's your OFM. There's one of those tails. This is where you guys are pinpointing where the market is most likely to continue, where you're riding that momentum in the direction of the trend. And then we get weak triggers again, and there's another reversal. Creates momentum, there's a tail, opportunities. And then we get into that transition phase. And there was probably a fib there, maybe a mid-band. And this transition phase, as I like to call it, this is the fight between buyers and sellers. So the large crowd always has two sides. They got the guys that want to buy and the guys that want to sell. When your colors don't match, when the large are down and the small are up, or the background's green and the triggers are red, guys, there is no momentum here. Rule number 1 is not met. You have no idea what's going to happen. And this is where a lot of you are going to try to predict, well, the background is green and I'm going to try to go up because honestly, I want to be first. I want to be the first one in. I don't want to wait for the advantage because then maybe I'll miss $50 worth of whatever. If you learn how to sit still when your advantage is gone, eventually somebody wins. Eventually somebody creates that momentum. And guys, that's where it's at. So I want to ask real quick, and I like to do it. Feel free to give me a why. It lets me feel good about the world. Is everybody cool? When the triggers separate, when the scissors open, when they're wide in the angle, guys, this is the look that pushes the market, and this is the look that can break areas. And then 2 beautiful examples, weak triggers, and we're literally seeing the retracements coming right off of the areas because I no longer have the strength to push. And I'm telling you, it can be that easy. Commit to one or the other, hopefully, the advantage. And once you have it, once you have that momentum, once you have a market that's likely to continue in the direction of the trend, we have to make sure that we have a clear path. We have to make sure that we're not trading into an area that may reverse the market. Earlier I said that the large crowd makes decisions. The people that control the market make decisions at these key Fibonacci areas, and they may create bounces. They may create fights. They may actually reverse the market completely, guys. And these areas are nothing more than horizontal lines on your large chart. So there's divergence, highs and lows, and divergence means that the market went down then up, and there was a loss of momentum. You see a cyan line and a negative number. The market went up then down. There was a loss of momentum. You see a magenta line, and these lines become like lines in the sand. If the large crowd gets back to them. We have Fibonacci resistance, those red fibs. And when the market is trending up, this is a point where the market could stop, could bounce, could reverse. And when the market's trending down, Fibonacci support behaves the same way. There could be a bounce, there could be a fight, there could be a reversal. And then there's also yellow 1-to-1s, guys. And when price gets to them in an uptrend, they can behave as resistance. and in a downtrend they can behave as support. I am going to give you guys the PowerPoint that I used to teach, but I'm going to drop that picture in the room as well. So if decisions are made at these lines, right, if the big crowd's making decisions at these lines, it kind of sets the tone for how you identify a termination condition. And it begins with allowing price to get to the area. That is the first part. So if you're a note taker, put a big number 1. Great question, Gary. Can I go through, let me go through the recipe for termination conditions, and I'll tell you exactly why. Fair? I got a little mojo working here. Awesome. Thank you for the question, because that's a good one. So guys, if the large crowd's pushing up, they're in control, the market's going up, everything is good, and then they reach Fibonacci resistance. Price reaches the area. Once price reaches the area, that decision-making process is set off. And you don't know what it's going to be. It's either going to break, it's going to roll, they're going to fight. Hell, I don't know. But if price reaches the area, ask yourself, where are my triggers? And if my triggers remain below resistance, resistance is a termination condition. Rule number 2 is not met. The path isn't clear, and that says no trades into the area. You don't have to hope that the market will continue up. You know that it could potentially go down. So if price reaches resistance and the triggers remain below, no more long trades. If that resistance reverses the market, those large triggers go from green to red, now it's what we call a strong top. And a strong top is a precursor for the highest probability trend trade short you can take. The strong top is also rule number 1 for 3 other trades that you're going to learn after you learn this trade. And from that strong top, everything goes down. Life is good. Price reaches Fibonacci support. Where are my triggers? They're still above support. Therefore, support is a termination condition. No more trades into the area. And it is that simple, guys. Once price reaches the area, we're done with price. The triggers take over. The triggers tell the story. Is everybody good with that? If price reaches an area and the triggers don't break, don't go long. And there's resistance, guys, right in the moment. First bar, crude oil. Resistance holding like a champ. That's what it looks like. That says no more long trades. That told us no more long trades. Pretty cool, right? That divergence low is where the reversal happened. That resistance is where the bounce happened. Look at how support creates untradeable bounces. Guys, rule number 2 is going to keep you out of a truckload of hurt once you learn to trust it. But like I said, areas break. So we're going to use the triggers to tell us that it's broken. If price reaches Fibonacci support, the triggers are above, do nothing, you don't know what's going to happen. Once the smalls and the large get below support, support is broken. The path is clear until you reach the next area. The triggers tell the story. Price reaches resistance. My triggers are 7 days below that area. I have to sit on my hands until the small and large get above resistance. Then resistance begins to behave as support. My path is clear until I reach the next area. And guys, it really is this simple. Brand new users, when you look at your chart, you either have a termination condition or it's a clear path. And let it be that easy in the beginning. Don't overthink it. Let it either be a termination or let it be a clear path. And what you're going to do is you're going to look and you're going to go, oh man, no long trades. Well, that just saved my bacon. I love that. And then smalls, large got above. Let me look for a trade. Oh, maybe that was a trade right there with a little weakening, right? So maybe when that resistance broke, look how it pulled back. Look how it behaved as support. Let's circle this one. We'll come back and take a look at it later, see if that was a trend trade. This is the basic. This is remedial. This is 101. This is building a foundation. And once you understand the difference between a termination and a clear path, it sets you up for the second trade. And the second trade is what we call a medium probability trade. And a medium probability trade means that most of your indicators agree for the trade. However, a small issue exists. And guys, I want issue to be singular for you. The more issues you create, the less likely you are to win. But your first issue, or the first trade that you take with an issue, is what we call a 50-50 trade. And 50-50 is not your chances of winning. 50-50 is a reference to the trigger lines because the trigger lines tell the story. So if my small triggers smash through Fibonacci support, I mean smash, let them get 3 or 4 points through. And my large triggers are lagging behind. They're a slower indicator, so they're still above support. Well, then 50% of my triggers are through and 50% are not. Guys, this look requires momentum because what we're sacrificing is a clear path. I don't want to give up another advantage. So with odds favorable momentum, when 50% of my triggers break and 50 don't, guys, there are tons of opportunities to take advantage of that potential to break. But because the path isn't clear, it has to be managed a little more aggressively. And that's one of the secrets to those medium probability trades. When you start to talk to yourself in terms of advantages, you say clever things like, oh man, I have momentum, but my path isn't quite clear. Let me manage a little more assertively. Let me take quicker profits. Let me get to a zero loss level just a little bit faster because I know through my chart reading that it's not perfect. And then one more thing, guys. There will be times, and then Bronco, Gary, I've got your answer right after I go through this. There will be times when your path is not clear because of stacked areas, guys. There will be times where you just have to wait. This is 90% of your day, but that's okay because the futures markets trade about $220 billion an hour. It takes $400 a day to put you in six figures. 400, that's it. So you don't need every move. Focus on having your rules met. All right, so guys, let's talk about why are there different fibs on the 13.2 than the 5.1, than the 21, than the 55. And I'm going to show you this right now. You're going to like this. Let me give you a little how-to or what's happening with these fibs. So when I open my software, it measures every swing. So when I say swing, let's go to the live market real quick. And let me show you exactly what I'm talking about. So Gary, when you open your software, every up, every down, every pivot begins to get these Fibonacci measurements. Every time it does something, whether it's an up or a down, every time a pivot is formed, it creates an opportunity. And this is what the software does. So it does it on the 13.2 chart, and it does it on the 5.1 chart. And then your software builds these higher time frames, and it builds these synthetic time frames. And it does retracements, and it does projections, and it does all these things. And it looks like this, and it's individual to each chart, which is kind of crazy. And then what happens is this algorithm comes in and it begins to weigh them, it begins to sort them, and it creates those areas. But because, Gary, where's my small chart? There we go. Because the pivots on this chart are unique to the time frame, to the smaller, faster time frame, and the pivots on this chart are unique to the higher time frame, you're going to get different Fibonacci areas. Does that make sense? And it's the same reason that you'll get different yellow 1-to-1s, because these come from the large chart swings and the yellow 1-to-1s over here come from the small chart swings. And the same is true on divergence. These are unique to the large chart. But what's cool, let me go into the second thing because I love this question, guys. On our large chart, Gary, you're going to have 3 time frames worth of Fibonacci. You're going to have these skinny lines on the 13.2 that don't seem to go all the way. They stop printing. And these are from the 5.1 chart, and they are just as important as these big fat ones that don't print all the way to the right. And these are from the 21.3 chart. And then the ones that do make it the distance, these are native to the 13.2 chart. So what you have is 3 time frames built off of tens of thousands of calculations on the chart that defines areas. And what happens is now you have this awesome, you can see the 5.1 here, it's native, and you can see that it stops on the large chart. And look how it stopped the market. And over here it was a 13.2 fib that stopped the market. And let's see if we can find one. And right here It was the 21.3 fib that stopped the market. So one of the amazing things about what we do is we know precisely where highs and lows can be, and we can use those trigger lines to help us take advantage of it. We can use those rules to help us capitalize on understanding where the large crowd is most likely to make decisions. Does that answer it? Was that a good answer? I hope that wasn't too wordy. I'm still floored at how effective Fibonacci is. I'm floored every day when I see this stuff. You're welcome. Let me show you a picture that I took this morning, and I sent this to my brother. John Novak and I talk every morning extensively. This was the picture that I took. So here's a fib. Here's a couple fibs. This is NASDAQ. If you don't believe that decisions are made at these areas, guys, this is, look at the dissection. Once it reaches the area, look at the buyers and sellers fight on the smaller, faster chart. Look at them get above, get below, get above, get below. And I'm telling you right now, knowing where this can happen, your fibs are worth 100 times what you ever pay for them. I firmly believe that. Because you know precisely the lines that you shouldn't trade into. And they're powerful. Don't take my word for it. Please do not take my word for it. Go back to your large chart and just look at how many times they stop the market cold in its tracks, guys. We did this one day. I took a picture, and it was like a big snippet like this. And it was 26 times that rule number 2 kept you out of losers, and it was only 6 times that the market broke, which meant, what is that, 75% of the time, the rules for termination conditions can keep you from losing money, but you have to be okay with that 25% where they do actually break and you don't get a piece of it. So rule 1 gives me momentum. I love it. I love momentum. Rule number 2, make sure there's nothing in the way so I have something to do with that momentum. And now rule number 3 is going to give me the precision that I need to reduce risk. It's going to give me the precision that I need to understand where the market is most likely to continue. And it's going to do it with such a level of precision that rule number 3 says that you're going to use a limit order. You're going to wait for the market to come to you. And you're going to use that limit order to buy or sell a pullback. And guys, that pullback, when I say pullback, what I mean is that little fight from the small crowd, that retracement. And rule number 3 is going to have that limit order waiting at an area, at a fib, at a mid-band, at a yellow 1-to-1. And it needs to be on that small chart, and it needs to be inside of triggers. So why do I say that? Let me do this. Use a limit order to buy or sell a pullback at an area inside of triggers. For the new users, for my Jeffries, for my Garys, for my Trinaboys, for all you guys that are new, favorable large triggers is the absolute best of the best look that you could ever hope for. Favorable large triggers means that the large triggers and the synthetic triggers are overlapping, one on top of the other, like two snakes riding piggyback. This is your best of the best look because one of the phenomenons that is true is price returns to large triggers. It's a moving average, and you math guys can correct me, but I believe it's called the regression of the mean. When price accelerates away from a moving average, it tends to pull back. It's the regression of the mean. These trigger lines define precisely where that retracement is most likely to occur. And then when you have areas inside, you give the market something to bounce off of, something to ricochet and continue in the direction of the trend. So when I talk about rule number 3, I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And I think that's the language that should show up on your charts, guys. So you know what? I'm going to use entries from the spreadsheet. I'm going to use, we'll go back to these, but I want to do this one. Let me go to the client trades. And let's do this, guys. Everything starts on the large chart. The large chart is coming from a termination that reversed the market. Guys, that's a strong bottom. This isn't a rule, but it certainly adds some warm fuzzies. First, I look for momentum. On my most current bar, my smalls are above the large are wide, there's space there, life is good. I have to look for a termination condition. My recipe for termination conditions never change. Price needs to reach an area, and my triggers must remain below. Guys, do you see that price is 9 ticks off of Fibonacci resistance? Fibonacci resistance is a target. So once my rules are met, I'm going to look for an entry. I'm going to start looking at triggers. I'm going to look at areas. I'm going to see where they line up, guys. And my job is to wait for the fight. My job is to wait for the small crowd to kick in, for the pullback to start. That begins with a reversal bar. And this reversal bar signals the beginning of the fight. This reversal bar signals the beginning of the pullback. This is not my entry. This is what has me pinpointing where my entry is going to be. So once the reversal bar prints, I'm going to look for those trigger lines, because large and synthetic, guys, this defines where these price bars are most likely to return. Triggers let you know where price may return. So I'm going to draw a box from the very highest point of the triggers to the very lowest point of the triggers. But triggers aren't my bouncy thing. It's the areas inside. So I'm going to refine this even further. Once I identify my triggers from the top to the bottom, I'm going to look for the areas that fall within. This is what's going to create my window of opportunity. In a long trade, my window of opportunity will extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. In this black box right here, from high to low inside of triggers, guys, this defines where the market is most likely to continue. This defines where the small crowd is most likely to fail. And because I have this precision, because I believe in this methodology, because I've tested it and I trust it, the only thing left for me to do now is to activate a limit order, to right click on my chart and literally wait for the market to come back to me. I can wait, hope, wish and pray that the small crowd gets there, because there's nothing else I can do. There's nothing else I could ever be in control of other than making sure my rules are met, guys. And if they get there, I'm in a trade. And if they don't, I'm not. So go in the other direction. Large chart rules must be met. I need momentum and I need that clear path, and that's what sets me off to wait for the reversal bar. And the reversal bar signals the beginning of the pullback. The reversal bar is not my entry. So once I get the reversal bar, I look for triggers, because triggers define where the market is most likely to return. And guys, the further apart these triggers are from one another, the bigger this box is going to be, and that's a little terrifying. So, from the lowest point to the highest point, but the triggers are not my entry, right? Otherwise, I would already be in on the reversal bar. Once I find my triggers, I have to look for areas. Fibs, mid bands, yellow 1-to-1s, and they have to be inside of those trigger lines. So my white box defines where the market is most likely to continue. There was a fib update right there. That's why there's two boxes. From the lowest point of resistance to the highest point of resistance, guys, this pinpoints where the market is most likely to continue. This pinpoints where the small crowd is most likely to fail. The only thing left for me to do is to activate a limit order, a tick or two below that lowest point of resistance, and to say, I hope the small crowd gets there. I hope they push. I hope their fight goes well. Because if they reach this yellow line, that's my limit order. If they reach that yellow line, I'm in. I'm in the market. I'm in the market with odds favorable momentum. I'm in the market with a clear path. I'm in the market having pinpointed precisely where the market is most likely to continue. And guys, all we have talked about for an hour today, the only thing that we've talked about for an entire hour is how to enter the market, how to recognize advantages, and how to get into that market. So we're going to go through it again, both directions. I want you to ask questions if you have them. The reversal bar signals the beginning of the pullback. It's not my entry. Once I get the reversal bar, I find my triggers, large and synthetic. One's not more important than the other. All they do is define where these price bars may return. Once I find my triggers, I look at the areas inside. Guys, it takes longer to say this, to talk it out, than it does for you to do this in real life with a little bit of study. This whole process will take you about 2 seconds once you study a little bit. From the highest point of support to the lowest point of support inside of trigger lines. This is where the market is most likely to continue. This is where the small crowd is most likely to fail, because the large chart has a freight train of momentum and nothing in the way. My limit order goes about 2 ticks above that highest point of support, and that is all I can do, guys. And the cool thing is, because now I understand where the market is most likely to continue, where I understand where those price bars are most likely to return, identifying the most likely to continue spot lets me know where the market should not go. Anything beyond the bottom of those triggers in a long trade is where the market should not go. Any fib, any 1-to-1 outside of those trigger lines on the wrong side of the triggers, this isn't my entry, guys. This is where my advantage is gone. Rule number 3 is no longer doing great things for me down here. And guys, this is where your initial stop's going to go, 4 to 5 ticks below the trigger lines in a long trade. And you're going to force the small crowd to get there. You're not going to offer yourself up at areas inside of triggers. You're not even going to offer yourself up inside of triggers. Your first stop placement is where the market should not go. That's why we define where the market is most likely to continue, because it defines where the market should not go. So the reversal bar starts the pullback. Where are my triggers? There they are. They're overlapping, one on top of the other. I love that. Where are my areas inside? One area. One magical area most likely to create a bounce, guys. My limit order goes 2 ticks below it, and I cross my fingers and rub my lucky rabbit's foot. And I hope the small crowd gets there. If they do, I'm in the trade. My initial stop, 4 to 5 ticks above those triggers on the wrong side of the triggers where the market should not go. Any line outside of those trigger lines is not a part of the equation. Guys, this is your entry for the highest probability trend trade. And there are 3 ways you're going to take it. And I don't want you to believe you are immune to this, because I think everybody I've ever worked with has taken all 3 of these. The first one is the oh shit, it's going without me entry. The fear of missing out entry. The man, I don't want to wait for a pullback because what if it doesn't happen? I better go ahead and jump in trade. And guys, all you've done is given yourself no room to a target and all the risk in the world. And what happens is if you do succumb and you take this entry, let the reversal bar be the reason you get out. Let the reversal bar say, oh man, that's the wrong trade. Get the hell out. Let's wait for the pullback. The second one, and we saw this one yesterday and we saw this one last week, and we'll probably see it today if anyone's brave enough to share it. When you're almost to your limit order and then it looks like the market's going without you. Remember guys, this is a small chart. It's a fast chart. You're going to see fluctuations on this chart. It is not uncommon to see new users get in right at the highest point of that bar, only to have it come back to the perfect entry. And once again, all you've done is increased your risk and decreased your profit potential. So what we're doing is we're building trust. Guys, that's where the repetition pays dividends. That's where the pictures pay dividends. That's where the feedback pays dividends. You're learning to trust that areas inside of favorable large triggers are your best choice because they reduce risk, because they give you the most room to your profit target. And guys, this is the one where you're more likely to get the reversal bar in the direction of your trade. And if you do, if you get a reversal bar in the direction of the trade, you have redefined where the market should not go. And you'll move your stop 2 ticks below it, 2 ticks above it in a long trade. And it is not at all uncommon, Jeffrey, Gary, Trinaboy, to see Nexgen users take the perfect entry. Do that stop movement. Something changes, the market goes down and they lose $30 or $40 per contract instead of keeping things way out in the distance, 150, 175. And it's that precision that you could literally lose more than you win and still make money with a solid management plan, guys. So we have to build trust. We don't. I do. I trust it. I trust the hell out of it. You can't keep me out of a high probability trend trade. But I also teach this every day. I've studied it every day. I've done this exercise. I've scrolled back on my large chart and found those tails when the rules are met. Let's do it real quick. This is crude. Maybe they gave us one. When my rules are met, when I've got odds favorable momentum, when my path is clear, or even has the potential to clear, I'm going to circle a tail. And wow, look at that termination working again. I'm going to circle a tail. And if that tail on a smaller, faster chart, let me back it up, lines up with a pullback, I mean, oh my gosh, it doesn't get any better than this. Pulled back directly to Fibonacci support inside of favorable large triggers. Guys, I know that there's a lot of suspicion in the world on this sort of stuff. This is today. This is from a live market. This is not manufactured. This is literally odds favorable momentum. This is potential to break. That is horrible spelling. And then this is the most important annotation. Pull back to an area inside of triggers. And guys, I want you to see something. At the time of the pullback, my large triggers were up here. There's no areas in there. At the time of the pullback, my synthetics were here. Whoops, right behind that black box. There were 2 points where the market may return, and that creates a pretty big box. But when I break it down to the areas inside of triggers, that box gets dramatically smaller. And look at where the market bounced right off of Fibonacci support. Can I get a Y in the room? If this makes sense, guys, you have to take these pictures. You have to get this. Look, take them over to your spreadsheet. You know what? I'm going to put it in the client trades. I want this to be a study guide for you. And we're going to call this the perfect long. Because it really is. So the entry, Jeffrey, is going to be about 2 ticks above that fib. Let's go through it. You want to do it? Let's do it. I love it. Let's do it together. This will be fun. Boom, 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 boom. And this is what it's going to look like. Whoops. Sorry. This is what it's going to look like when it's time to take that trade, Jeffrey. This is my large chart. Smalls are above the large are wide, angle in the direction of the trend, the space is there. Everybody, brand new users, do you see that there is odds favorable momentum, that I have strong triggers, that rule number 1 is met without question? Do you guys see it? That's your look. This is what it's going to look like live. And the market is going to be trading up here at like 98. Bum, bum, bum. Whoops. I guess it'll be trading up here at 96. There we go. We'll line it up. So only one of you see it. Bob, I love that you do. I'm going to ask one more time, guys, because I don't want to leave anybody behind. Does everybody see that this is strong trigger lines, that this is rule number 1 being met, that this is the best case scenario I could ever have with momentum in the market? Thank you. Guys, if you don't see it, tell me. We'll fix that. And now I say my small triggers have absolutely smashed through the area, but my large triggers haven't made it yet. Guys, this is that 50-50 look. This is that look that tells me that this fib has the potential to break because of that momentum, but it's not broken yet. So I may take a trade, or I may say I'm not ready for that trade, but I'm going to say I'm ready for that trade. I'm ready to take that trade. And my job is to not sacrifice another advantage. So I don't have a clear path. I'm going to assist on momentum, guys. But I have to wait for something. I have to wait for that fight. And check it out. There it is. There's my fight. There's my reversal bar. This signals the beginning of the pullback. Guys, I'm done with this chart. I don't need it anymore. I'm done with the large chart. It has given me everything I need to wait for my entry. So the reversal bar signals the beginning of the fight, guys. At the time of the reversal bar, I'm going to draw a box from the top of the triggers to the bottom of the triggers. And this shows me where price is most likely to return. Are you guys with me so far? It might go all the way down here to 75. That's all the triggers do, is they show me where the market may return. And now I have to say, well, where's it most likely to bounce? Somewhere from the highest point of support to the lowest point of support, guys. This box represents my window of opportunity, the area where the small crowd is most likely to fail. This box represents where the market is most likely to continue with this trend, with this momentum. You guys good so far? My job is to right-click on my chart and put a limit order, tick above that fib, and say, all right, small crowd, do your thing. Come get me. That's my entry. Oh, but they didn't. They didn't come get me, ladies and gentlemen. I'm still waiting. You guys see how I'm not in a trade and now the market's all the way up here? I'm going to tell you right now, and I'm going to put a line there. Bob, that's where you just jumped in, afraid that it's going to go without you. Gary, that's where you said, oh no, it's going without me, I better get into this market. Jeffrey, you were like, dude, they didn't come get me. Nexgen sucks, I'm jumping in. Not me. I forced them to give me my entry. My entry is where my advantages are. Not out here in the middle of nowhere. And look at that. It goes up and I feel horrible. And it goes up again and I feel sick to my stomach. Oh no. Maybe the small crowd's still fighting. I can still identify my triggers. I can still identify my areas. The process just started over. And my window of opportunity is right here. You guys see it? I'm telling you, the market will head fake you. The small chart is a tiny little chart. And down it comes, and here it is, and it's almost there, and I'm so excited, and this is amazing, and I am long. I'm in a long trade. Bob, was that you? Damn it, Bob, you got stopped out at the area inside of favorable large triggers because you panicked. Way to go, Bob. That's why we can't have nice things. Just kidding. Totally normal, right? But if you're in up here, guys, you don't want your stop all the way down here where the market shouldn't go. That's terrifying. That's a lot of risk. And it's scary to see the market go against you, but it's okay. That's a part of trading, especially on the small chart. Did you guys notice that the large chart still says up? All the rules are still intact, even though the small chart says down, or at least gave the retracement. So we're in, Bob. And then there's that magical reversal bar right off of support, right inside of favorable large triggers. Watch this. My new risk is 2 ticks below. I have $30 of risk on my trade. I have $30 of risk on my trade because I pinpointed where the market was most likely to continue. Does that make sense, everybody? I like doing these bar by bars. I think it really paints a picture. So the goal is that you can do this live, that you can do this in the moment. And check this out. If I put this box around the bottom of that tail, boom. The bottom of this move, we pinpointed where that tail was most likely to form. And off it goes. Right to Fibonacci resistance. Ladies and gentlemen, that is an 84.14. That is a $300 rules met trade, and it happened today. It happened today in crude oil, guys. I didn't have to go back 8 years to go find something that worked so I could take your money. This happened this morning. And it happens every freaking day. Termination conditions happen every day. Odds favorable momentum happens every day, guys. The high probability trend trade typically sets up 3 to 4 times a day perfect on a chart. Nice job, Gary. But you got to learn how to take it. So new users, this is where I bum you out. In order to get to where you want to be, you've got to learn these looks fast, guys. You've got to be able to look at a market and understand what you're looking for, and you've got to be able to do it quickly. There's no expectation to be able to do it quickly if you're brand new, because you got to study a little bit, right? So in order to get to where you want to be, you got to recognize these looks and patterns quickly, guys. This drill reinforces the lessons. And I'm telling you right now, we got 2 weeks off after tomorrow. You've got time to study. This is where the picture taking comes in, guys. Take 25 pictures of strong triggers and weak triggers and know the difference between the two so you can commit to advantages. Take 25 pictures of a clear path and of termination conditions and know the difference between the two so that you can always commit to a clear path. And go take pictures of those entries. But the goal isn't just to snap pictures all willy-nilly and never think about them again, guys. You've got to annotate your charts. You've got to talk about the whys, because when you're looking at a picture and you take the time to analyze, to type, to put it into your spreadsheet, what happens is you create a connection between what you see and what it means to you. And the cool thing is you can do this, each individual picture, guys, and go fill up. Go fill this up. Strong first bar, what does that mean? All green, smalls above large, with space between the two, strong triggers, odds favorable momentum. There it is. That's my look, and that's always my look. And if I take the time to type it out when I do that, it becomes easier to recognize. And the same is true. What's it look like when my advantage is gone? Smalls inside of the large, weak triggers, loss of momentum, anything can happen. I'm really cementing these rules, guys. I've given you a huge head start. You have 56 pictures of strong triggers. You have 29 pictures of weak triggers. You have 18 pictures of a clear path. The most broken rule, you have 81 pictures of termination conditions. 81 pictures keeping you out of trouble. And then I've given you about 17, I guess, or 12 of what the entry looks like. So that's the first step in becoming a confident chart reader. And since you're new, I'm going to give you pictures of what it all looks like. There's a termination that reverses the market. That's a strong bottom. Not mandatory. It's not one of the 3 rules, but it does set you up for the highest probability trend trade. It's a must-have for the 50-50 trade, and it's rule number 1 for 3 other trades that I can think of off the top of my head. There's your momentum. There's your loss of momentum straight from the guide. This never changes. There is no smalls not outside of the large, don't have momentum, but. The second you show your butt, you're breaking your rules, guys. It either is or it is not. It's either going to be a termination or a clear path in the beginning, and then that opens the door for the next trade. That opens the door for that 50-50 trade, finding more opportunities in the market. And this is how you define your entry, both long and short, guys. Everything you need. But Mark, I mean, it's just rules. How do I know when to use them? Well, follow the plan. The KISS plan. Love the KISS plan. I built this because a guy called me one day and said, Mark, I can't find a trade. In a market that moves billions of dollars an hour, he couldn't find a trade. It's crazy. And I told him, I said, Bob, and I call everybody Bob when it's hypothetical. Bob, you're not looking for you're not looking for your rules to be met. You're looking for the money. Stop looking for the money. Look for the advantages. And we came up together and we built this checklist. And this is the KISS plan. And guys, this is a stepping stone in your learning journey. This is the keep you focused plan. This is the learn to read your indicators plan. This is the learn to trust plan. Because this is a plan that typically wins 70 to 80% of the time. And the people that I know that I've worked with that use this plan, guys, they tell me that they're winning around 80% of the time. That's outstanding. That's unheard of. It's designed to optimize your chances of success with the high probability trend trade as a new user. It's designed to help you find more wins than losses. Losses. I'm making up words. Because that's where the confidence comes from. And then through simulation study, class feedback, continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Once you can read your charts, once you can recognize those advantages, you will find more trades. So your simple plan for consistency, don't fight the large chart. Let me show you what I mean. There's two ways people fight the large chart. The first way is when they see this red line and they try to go short because they believe resistance should hold, and they fight the momentum. Ed, you know who I'm talking to. And they just get slaughtered. That's one of the biggest things that I see. Well, it's resistance. It has to hold. I'll go short. To hell with that momentum. The second one is, man, I didn't catch any of those longs. Let me trade into that red line and hope that it breaks. Let me trade into that blue line and hope that it breaks. Guys, if you can eliminate fighting triggers and fighting areas, you're doing better than 75% of the world that I've worked with. Define your entry. Guys, define your entry. Go through, use the rules, get in where the market is most likely to continue. You've got the checklist. This checklist has pictures. You've got me to give you feedback to make sure you're taking the right entry, guys. Great entries create manageable trades. Great entries reduce risk. Great entries increase profit potential, guys. And then you have to manage it. And there's this old adage that mature traders, experienced traders, successful traders manage their risk before they ever manage their profits. You've already managed your risk by insisting on strong triggers. You've already managed your risk by not trading in determination conditions. You've already managed your risk by entering where the market is most likely to continue, and it gave you the ability to know precisely where the market should not go. So your first stop, your initial stop, is 4 to 5 ticks below those triggers. Now let me show you something. Nexgen gave you strategies, and these strategies have 12 ticks stop. And very often I see people say, all right, my stop is 12 ticks. Your stop is not 12 ticks. Your stop is where the market should not go. 12 ticks gives you reaction time. 12 ticks gives you the time to put the stop in the right location. Do not let an arbitrary number define your stops or targets once you develop a plan. We'll let them define targets initially, but if I'm in at the area inside of favorable large triggers, then my stop goes below the triggers, 4 to 5 ticks. And I'm either going to get stopped out or I'm going to get one of those reversal bar markers, or reversal bars. And that reversal bar says to me, hey Mark, guess what? The market's now going up with the trend. The market is now going with all that momentum. The market's moving in the direction that where you had a clear path. Let's redefine where the market should not go. Let's put that stop 2 ticks below it. And then the small crowd, if they want to come get me, they can get me. Who cares? Guys, we just watched a live example where you ended up with $30 worth of risk. They're either going to get you or it's going to go to your first target. One of the things about the KISS plan is it is designed to get you paid. It's designed to get you comfortable getting paid. It's designed to put you in a position to get paid more often. And your first target, we're trading 2 contracts. Your first target is $100 away from your entry. Your first target is $100 worth of profit, guys. And it's easy to hit with all these advantages. And even trades that don't go the distance very often hit that $100. And once you hit it, you go break even. You take all the risk off of it. And you say to yourself, I don't care what happens next. I've already been paid. I wouldn't be in this trade if it wasn't for odds favorable momentum and a clear path. And guys, all this stop does is it helps build a little trust in the large chart. It's probably not your best stop, and you'll create a plan based on your ability reading the indicators, but in the beginning, leave it there. Have nothing to lose. Sit on your hands. You're either going to get stopped out, break even, or it's going to go to your second target. And your second target in the KISS plan, and the plan designed to get you paid, is only $200 away from your entry. That's it. $200 away from your entry. Which means that one trade, 3 rules, 2 charts, as simple as I know how to make it. If that's the best you do every day over the course of the trading days in the year, that's a $75,000 year. Ladies and gentlemen, if you don't already see the potential to do that, then we got to talk. You need to ask more questions. Because we've already seen it once today in crude oil. Add a break even to it and you're in 6 figures. Start to get a little comfortable, double it. You're 2 times 6 figures, guys. Being a day trader isn't about catching the most trades. Being a day trader isn't about always being in the market, always being active. Being a day trader is making sure that you have an advantage, a proven pattern every time you enter the market. So when you decide to get off a simulator and go live, there's the 2 things that you have to know. You have to know why you'll enter and why you'll exit. That's it. Your entries are based on patterns that have been proven to win more than they lose. You know they win more than they lose. Why would you ever miss that entry? Because you don't trust it. That's where the pictures and the feedback come from. Why would I exit when I have all those advantages? Well, because my advantages are gone. And guys, your exit plan will change over time. Your entry plans may change over time. But rules eliminate the need to know what's going to happen next. You'll never know what's going to happen next. Eventually, you'll trust your plan enough that you don't care what happens next. You don't care if you get stopped out of the right trade because you know you will 20 to 30% of the time. And you're going to begin to focus on the execution as opposed to the result. And guys, everybody's in a constant state of growth. And I've never seen anybody's plan stay consistent forever. Even the most consistent traders begin to see patterns outside of their plan. And maybe they incorporate them. Some of them create pirate trades outside of these other trades. And guys, if you're in a trend trade, there's a set of rules for the high probability trend trade. There's a set of rules to exit. They've got to be yours. 50-50 trade has a different set of entry rules, different set of exits, same for the momentum, same for the HVA. So in the beginning, if you keep it very focused on the basics, what happens is you don't give yourself a lot of stuff to think about. It makes it a little easier. And then once this becomes second nature, add a trade. And then once that's second nature, add a trade if you feel like you need it. Add another if you feel like you need it. But that's it. I mean, that's literally everything you need to be successful with this software. So we learned the rules, right? We looked at them. We identified them. You know how to study them. You've got pictures of them. You've got a spreadsheet to track them. You know how to back test it now to go back and build trust. You can simulate. You can get feedback. It's a personal private session every time you do. You've got a plan. So guys, I just dropped a zip file. And that zip file inside of it has the chart reading 101, it has the high probability trend trade checklist with the pictures, has the KISS plan, it has that daily goal sheet reminding you that you don't have to make $1,000 every trade to be a successful trader. It has that exit conditions reminding you that every trade is unique. It also has a PowerPoint that I used to teach, and all of that stuff is in Microsoft format, but it's also in PDF. You have everything that you need to be successful with the software. The only thing you don't have is the repetition for it to be easy. Keeping it focused, momentum, path, and entry. Learn these in order. So if you're not cool on momentum yet, if you're like, man, I think I get it, but I don't really, raise your hand. Say, Mark, let's talk about momentum. If termination conditions are your Achilles heel, let me know. I can build 1,000 lessons for you. I can say it a million different ways until it clicks. And then, once you understand these, let's start finding some entry areas. I want you to avoid the pressure of becoming a day trader on day one. What I really want you to do is focus on being a chart reader. And this is my new favorite word. It's not even English. It's Kaizen, I believe is how you say it. It's a Japanese philosophy of continuous improvement and becoming 1% better every day. 1% better every day, guys. That's realistic goals. That's easy. That's smart goals. And if you do that, if you become 1% better every day, eventually you get to where you want to be. And that's the goal, to get to where you want to be. So that termination condition worked, didn't it? That's why we don't trade into areas. Momentum broke these areas. That's why we don't fight momentum. And now, if I get a reversal bar, that's my lowest point of resistance inside it triggers. That's my highest point. Actually, it's also my highest point. If the market decides to give me an entry, my stop goes right here, where the market shouldn't go.
Order bill.
There we go. I'm in. My stop is where the market shouldn't go. My first target has to be $100. That's on the reversal bar marker. How cool is that? My second target is going to be here at 80. But this was a medium probability. This wasn't a clear path yet. Does everybody see it? And did you see how quickly the analysis happens? I think I froze up. I did. I froze up. And the market crashed. Guys, this happens sometimes. Usually the more you draw on your charts, the less stable they are. So I'm in a trade. I can't even manage it. Oh my gosh, that's okay. My stop's where the market shouldn't go. I won't panic. My targets are where my plan says they're supposed to be. I won't panic. I'm coming back up. And we'll see what it does, or what it did, right? Let's go to sim. It's not letting me do my sim. There we go. Oh, it took me out. Dagnabbit. Should we do it again?
Order filled.
Put it where the market shouldn't go. Just for grins, guys, this is a 50-50 trade. This is smalls through, large not. Notice the divergence. Divergence is a loss of momentum. And a loss of momentum means that I'm losing an advantage. I already don't have a clear path. Now I have a loss of momentum. But I'm coming from that strong top. Where's the next fib? Let's just see what happens. But guys, this is what we do every day. If I get a reversal bar, well, my stop is where it's going to be anyway. So if I get the reversal bar, my stop goes 2 ticks above it. But my stop is already where the market shouldn't go. Are you guys with me on this one? Strong top, momentum, pull back to the area inside of triggers. That's the late entry because we crashed. First target at 94, which is $100. And I could do second target at 84, which is $200. And there's nothing for me to do at this point. I either get a reversal bar in the direction of my trade. And guys, I'm not telling you to take this trade. This one doesn't fit the rules for the 50-50. This doesn't fit the rules for the 50-50 because of the divergence. But we're going to take it anyway because I want to show you that's where entries come from. And we're going to go mechanical on this. We're going to follow the KISS plan management. It's either going to hit my first target or it's going to stop me out. Those are my only two options. If it gives me the reversal bar, my new stop will be 2 ticks above it. Show me your pictures, Morgan. There's my reversal bar, so I would move my stop 1, 2 ticks above it. And it either hits my target or I get stopped out for $60 a contract is where I'm at. Oil has been a slaughter for you this morning, trying to white bar from that strong top. Show me your pictures, Morgan. Let's see what you did. Is everybody with me? Jeffrey, Bronco, Irish MKC, you wanted me to do this stuff live. There it is. They're so close, right? But they haven't gotten me yet. I could still get stopped out of this trade. Guys, this is a medium probability trade. This is not a high probability scenario. If I get a second higher divergence, it's probably over. But my rules say, don't touch a thing. Don't get tricked by small chart fluctuations. And we'll see what happens. If you watch price, if you watch that small chart, it's going to make you sick to your stomach. It really will. Thank goodness you guys didn't jump ship, huh? It pulled right back to the mid-band inside of triggers. For those of you that needed a second run at it, it hit my target, but it didn't fill. That's not cool. We'll see what happens.
Target filled.
Well, there's my first target. So my rules say go break even and either let it hit my second target or get stopped out break even. Let me get some markers on there so you guys can see where we got in. What do you guys think? It doesn't have to be hard, right? I had momentum, the potential to break. I pinpointed my entry. I got paid. I have nothing to lose. Let's let it run. Is anyone upset about $100 in their bank account? Anybody upset about a $100 winner? Nobody? Everybody's good with $100? I love $100, guys. That's a steak dinner, maybe even a cocktail. Do you notice how the large chart hasn't changed? Large chart still says down. Large chart still has momentum. Parts for hot rods. Amen, Jeffrey. Hell, those large triggers are almost breaking below. So Gary, Bronco Gary, and Trinaboy, and Jeffrey, and anyone else that's new, we're just learning a pattern. Yeah, but Andy, my plan says $100, $200. That's my plan. And I'm brand spanking new, and my job is to learn how to follow a plan. My job is to learn how to follow a plan, Andy. And if I start changing my management because of my emotions, I'm not following a plan. Does that make sense, everybody? If I choose to move my targets in the very beginning, I'm not following my plan. Andy's 100% right. And Andy, honestly, in my world, my first target would have been at 86. My second target would be all the way down here. But we're following the KISS plan because that's what I teach in the room. Trinaboy, does it make sense? Bronco Gary? There's a lot of moving parts. So when you start worrying about management, start talking, right? What does my large chart say? My large chart says down. My large chart still has momentum. My large chart, those large triggers are almost through. What does my small chart say? All of my triggers are down. I'm below the small triggers. I bounced off an area. I mean, jumping Jehoshaphat. Everything says down. But the longer it takes, the more likely you are to change your plan. So I encourage you guys, follow the plan. Andy, stop managing my trade. There's a million ways to do it. We're doing it by the KISS plan, Andy. We're not doing the Andy plan right now. We're doing the KISS plan. Your plan rocks, Andy, because you know how to read charts. I'm just learning. This is day one for me. This is day one. Day one, and my plan says don't do anything until that target's hit. You're either going to get stopped out, break even, or you're not. But guys, I already got paid. My worst case scenario in this trade is I only make $100 and I have to wait for the next trade. Don't be sorry, Andy, because everything that you're saying is valid. Everything that you're saying is 100% valid for somebody that has a different management plan than the KISS plan. But I don't know how to write a plan yet. So I'm just going to do what the rules say. I'm going to learn to trust my rules. Oh man, they're coming back for me. They're right at an area inside of triggers. I'm so close to being stopped out. This is terrifying. Oh no. Egads and little fishes. Guys, I love doing this. I'm the most stoic mofo in the world when I'm following the KISS plan because I don't want to be in control. Guys, I've been married for 27 years. I gave up control at least 24 years ago. So Just let the market do what the market's going to do. It's either going to get me or it's not. I've already won. That's the point I'm trying to make. I've already won. With a great entry, with a solid management plan, guys, even trades that ultimately fail become a way to make money. Who would have got scared and jumped out, even though the pullback was directly to resistance inside of triggers? But Jeffrey, do you see? You have Fibonacci resistance, you have a mid-band, it's inside of triggers, and the large chart still says go. Imagine how well you're going to trade with a little bit of practice, with a little bit of understanding, with a little bit of trust. Pretty cool though, right? And Jeffrey, that's normal. It's terrifying to watch the market come against you. It's terrifying to feel like you have something to lose until you trust that this is the best look, that this is the look that typically produces results. And then it's crazy just how calm you'll be, how patient you'll be. They almost got us. So what if I get another reversal bar off of an area inside of favorable large triggers? I could move my stop above that. It's already there. And it didn't get us, did it, Jeffrey? Way to hang in there, bud. Way to hang in there. Guys, this is what I teach every day. This is exactly what I talk about every day. This is the plan that I give you every day, 100%. But this is why you can't get caught up in these fluctuations. Let's put a circle or a rectangle around that one bar that we've been going on. All of this has happened in that one bar. All of these shenanigans took place inside of that bar that hasn't even finished forming. The small chart will talk you out of great trades if you focus on the small chart, guys. And that's why you have to have those advantages in place. That's why you have to understand what your exit conditions are. That's why you have to understand what your entry rules are. Because once you do, and once you trust it, it becomes easy. It really does. It becomes easy to sit through this, to look at this, to do this. Are there any questions about the trade that we're in? Why the area inside of triggers was the right entry? Why the large chart said, hey, let's do it? It's just repetition. Guys, it's easy for me because, let me show you how many pictures I've taken this year, just this year. Keep in mind, I've been doing this for almost 5 years now. 7,683 pictures. There's a reason I don't panic anymore. There's a reason that I can do my analysis in half a second. That I can look at a chart and say, all right, I don't have any other charts open. Hell, let's open one. I don't need to watch that trade over there. We're going to open up the S&P all the while that other trade's going. I have no idea what account it's trading on because my simulator's not moving. It's okay, it's a good trade to be in.
Stop, Phil.
Oh, it got us break even, guys. I heard it. Look at that. They got us break even. Damn it. We only made $100. Anybody sad about it? Did anybody catch the pullback to resistance inside of triggers with odds favorable, momentum, and a clear path? Guys, this is what we do every day. But I also hydrate extensively every day. So I'm going to take 5 minutes. And when I come back, we're going to look at your charts. We're going to look at your pictures. We're going to look at your questions. And you're going to get all the answers that you need. And when I come back and I look at a chart, there's only 3 things that I care about. Momentum, path, and entry. It doesn't matter to me what kind of trade you take. Doesn't matter to me how you manage it. I want to see momentum, path, and entry. and I want to hear what you saw. And this is the most important thing. So especially Jeffrey and Gary and Trinaboy, I want to know what you see on the chart. I want your interpretation of momentum, of path, of entry, of exit, so that I can make sure that you're reading your charts correctly, so that if you're not, we can get you to where you want to be as soon as possible. And most importantly, guys, if you take a loser, don't hide your losers. Do not hide your losers. The losers are where the best education comes from. Odds favorable, clear path. Did it go? Man, that might have gotten you on the 5 ticks. From 62.50 to 63.50 is 4. Guys, 5 ticks might have kept you safe on this one. How cool is that? I'll be back in 5 minutes, guys. Go stretch your legs. Choking on a cookie. I love it when the first hour takes an hour and a half. It means that we're learning. It means that we're doing stuff. It means that we're going through lessons and you guys are asking questions. So I appreciate it. Guys, I'm going to go through and I'm going to start looking at pictures. And here's a great example. This is the first picture posted today. This is from Ron, and Ron takes a little unorthodox trade, and this trade used to freak me out until I realized that it is all about momentum and path, guys. So what Ron had here in the S&P was a strong trending market up, which means that he had 30 bars and broken areas and no reversal bars. And at that point, you just assume that momentum is good because this is a strong trending market. And he lets the back of the bar. He says, hey, check it out. If decisions are made at fibs, and look at how the tail, there's a tail right at a fib, there's a tail right at a fib, there's a tail right at a fib. Fibs are where decisions are made. So he says, let's get price past that decision making point. And once it does, if everything looks good, I'll grab $110. I'll grab a quick $127. And guys, it's just a base hit. And base hits pay bills. Base hits pay bills. New guys and old guys, did y'all ever see Moneyball with Brad Pitt? The whole goal was to get on base. It wasn't the home run hitters. Steve, I'd be happy to. Are they spread out throughout the day? Let me get them. Guys, if you ever have to leave early, do exactly what Steve did. Go, hey, Mark, I got a split in 10 minutes. Can we look at my charts? And what I'll do is I'll run through and I will look at your charts. Is that you, Steve? Looks different. There we go. 1, 2, 3, 4. So we're going to get going and let's see what we have. Odds favorable momentum, cleared trouble. You get in and you got out at trouble. I like it. Not a lot of room to that divergence high though, Steve. Not a lot of room to get to your first trouble area. That would be the only thing that I say about that first one. Does that make sense? By the time it clears, I'm almost there. So for me, I like room to my profit targets. It makes me happy.
Connection.
And then the second one, this is the S&P, so I don't worry about pink 1-to-1s. Large chart says go. Small chart didn't clear. Created new charts, didn't know she had two ES 13.2 charts, so entry was based on 13.2. After your exit, noticed my mistake and made a 5-1. Okay. But not getting above that fib, and then your next entry would have been right here. But you held through it, which works out. 213.2 is how can you not? Everything looks great. I like it though. You're letting the large chart lead the way, letting the large chart define momentum, letting the large chart tell you that there's nothing there, and then just finding a way to capitalize on the small charts. I like it. And then this one is more of the same. Odds favorable, nothing in the way. This looks like a gold trade. Once you clear trouble, you get in really late, and then once again, you're not leaving yourself room, Steve. So if you're following that chili dog plan, you're breaking entry rules on your small chart because this divergence low can create a bounce. Missed cleared trouble, high entry, but market was screaming down, so there was potential for the market to reach target. There is. There's also potential. I'll fly to San Diego and punch you in the nose. It's probably not going to happen, right? So if you're saying every time there's potential, it's okay to break your rules, you'll find potential everywhere, Steve. Does that make sense? What do my rules say? My rules say don't trade into a line. But there was potential. Who cares? Follow your plan because your plan has been proven to win more than it loses. And Steve, we know what happens when you deviate, right? We all do. I've done it. And when I deviate from my plan, when I start letting my opinions cloud my rules, that's where I start, well, it had potential to get to the fib. So instead I got stopped out of this one. It had potential to go to the next area. So I changed my stops and I held way longer than I should have and I got stopped out. And I'm not trying to be preachy, Steve, but you broke the entry rule. You broke the entry rule. And that was because of the chart thing. And guys, when I know your plan, I will do my best to hold you accountable to your plan. I really will. I'll do my best. And it's not that I want to beat you up. It's that I want to see you successful. Because most of you guys, I've seen you deviate from your plan. There we go. Not room to your target again. Not room to your target again. That's all right. They're teaching you to break your rules. They're teaching you to break your rules. Your entry was up here. Your entry was up here. And I don't know where the hesitation came from. And I'm glad you're winning. Let me say that. I'm glad you're winning. But it feels like a step back from what you've showed me. And guys, if it's moving at the speed of light, if you can't keep up with it, I wouldn't trade it. I wouldn't trade a market I couldn't keep up with. And you can if you want. I don't tell you guys what to trade. I don't tell you what markets to trade. But if I couldn't read my indicators fast enough to make good decisions, if I couldn't react fast enough to follow my plan, I have to believe that that's not my market. I have to believe that trading that market could create problems for me because I might trade into one-to-ones. So I get it. I get it. I love the victories. I love the victories, but big picture, what you showed me Monday, Tuesday, Wednesday does not look like what you're showing me today. And what you did Monday, Tuesday, Wednesday, you told me it was easy, that it was effortless, that you were winning more than you were losing, and that you felt like you were back on track. So I'm going to give you that feedback. You can do with it what you will. Nice trading, Steve. I hope that was helpful. And I think that's it. And that's hard. And FOMC, Morgan, I have the rule. I don't trade FOMC day. Yesterday I felt invincible. Yesterday I took 4 perfect trades, fit my plan 100%. I took 4 losers in a row. I hit my stop loss in 30 minutes yesterday after class, and they were perfect. They fit my plan 100%. But I know that news creates emotion, and I chose to do it anyway. And then I walked away. I'm closed tomorrow? No, we're here, Steve. We'll be here tomorrow. Tomorrow's going to be the last day. And then we're going to take 2 weeks off for Christmas. And we're going to do a lot of work on the funding company over the break. My brother and I are going to do a lot of work, but I won't be doing it in the classroom. But I probably will be around, guys, and I don't mind opening it up. And if you guys have questions, maybe trying to make myself available. You too, Steve. Take care, man. Hope you have a great day. All right. Let's see where we're at. All right, we got Ron again. This is Ron's pirate trade. Terrifying. But I'm going to talk about how brilliant it is, too. And I love this. Guys, when they're going to go work. There you go. When the guy that does it well gives you notes on the charts he knows you're going to see. His chart, he writes, not a trend trade. Rules are way different. Once high probability trend trade becomes easy, these types of trades start to show themselves. It's a base hit, it's counter trend, and it's the white bar really shouldn't work trade, and I love it. And what that means is Ron hit an area, and his large triggers were a full bar away, and he tries to capture that move on the way back to the reversal bar, and that's all it is. And he still had a lot of room to his reversal bar marker, but his goal is to get paid. And I love this trade. I would never take this trade. This trade gives me 32 levels of heartburn. But Ron, through his chart reading, has developed a pattern that wins more than it loses. And he takes it because of that. And look at this one. Odds favorable, clear path, nothing in the way. Strong, rowdy triggers. I love it. Strong, rowdy triggers. Base hit. It probably went further down. But Ron says, all I got to do is this 5 times a day. 5 times a day. And it's 6 figures, even after taxes. Great trading, Ron. All right. Who was this? This was Jeffrey Dean, right? Saw two divergences push the market down, even with three divergences trying to reverse momentum. Got in after seeing triggers roll with a 50-50 and tightened my stop just in case it decided to go north. So, jumped into a fib hoping momentum would push it. Is that about right? Just jumped into a big ugly termination conditions hoping momentum would push. Did it? Momentum. There's a reason that I teach it first. There's a reason that I teach it first. I'm glad it worked, man. And you were coming from a strong top. And what a great precursor. Given those little warm fuzzies. Nice one, Jeffrey. Morgan, feast your eyes on the cluster fudge. The Foxtrot Charlie, huh? Strong top, triggers roll. Nothing in the way, so let's see what happens. There's your white bar. There's your HVA. Strong triggers didn't want to get left behind. Why didn't you sell the HVA line? That's what your plan says. And then it goes up. That would have got me anyway. And then you went back down from the wrong side of the fast triggers. Here's your problem, Morgan. Check it out. Once you get to the wrong side of these triggers, Clusterville. And check it, it goes up. And it's stupid and it's dumb and blah. And then it gets below them and it heads down. So entry, got scared on the exit. That's a good exit. Entry, refused to exit. Gets to the other side, these roll and it heads back up. Man. Absolutely. Shame to say, but the first time in a long time, you revenge traded, which should have been your cue to stop for some reason. Just grass for nothing. We've all done it, Morgan. Yeah, dude, these strong triggers, if they roll against you, it's probably going to push up. That's the same reason why you want to be on the right side of them for the short. And I don't know, where was that coming from? That was coming from 32, which was this divergence low right here. And man, they had something going on there, didn't they? 32 turned out to be a pretty powerful spot. I watch for divergences on my range charts. Well, I don't use them, but when I did use them, I'd look out for things like divergences. And like if I get this divergence right from the range chart midband, did it go up to 46 and then come down? Did it find that HVA up there? Because a lot of times they will. Bounce, bounce, bounce. Almost. It almost did. I love the white bar trade, Morgan. I would give it one shot because I did exactly what you did. More times than I care to admit. I give anything that's counter one shot, right? So I'll give the white bar. But notice that your white bar, and maybe this is something, I don't know, John Novak would be able to answer this. Your white bar didn't come from the termination, really. Well, maybe it did, right there. Like that would have been my shot. And that probably would have been my exit. And then after that, when it comes up, I probably would have gone short again right there. And that would have been my next short. But you see how the white bar entry is what? It's the white bar, and then it's the pullback to the fast smalls, and then it's go. Yeah, do a little study on it. Don't just incorporate it all willy-nilly. Guys, don't ever believe anything I say. Prove it. Go prove it to yourself. I'll give you ideas based on what I've seen in life, but I want you to go back and look at it and study it. So if you're working on something, Morgan, go take 20 pictures, right, of that white bar trade. Whoops. Trying to bring this up. There was your termination, there was your white bar, there was your pullback, and that was easy, right? All the way down. Did you catch that one? You're too busy listening to me, huh? So now here's my termination. So go back and look at them. Like there's a white bar, not quite from a term. There's a white bar. So if I were going to take a shot at this one, I'd have to do it like right there, right? And hope that it came back and snapped it. And if it did, oops, I don't have an ATM strategy in.
Order submitted.
If it did, that's as far as I would let it go. And as this box moves up, Morgan, I would move up with it.
Order filled.
And then it got me, whoops, and it reversed me.
Order filled.
Don't fight strong triggers. So make sure that tick data is on, Morgan. Right click and make sure that tick data is on. And then if it is, hit F5, reload Ninja Script, and see if that helps. And guys, I was showing Morgan an example of how the entry happens. But rule number 1, right? Don't fight strong triggers. And that's one of the things when you guys start going outside of the basic trades, is you've got to be able to piece 5 or 6 things together. Because while you were thinking long trades, you had a better chance with the 50-50 short. Does that make sense? A lot of you guys get real excited about the idea of going counter trend, and it's sexy to go counter trend, especially if it works. It really is. But the reality is, it's just easier to go with the flow. And if I have strong triggers on my large chart, the only direction I'm trading is with strong triggers on the large chart. That's it. That's my only option. And now crude oil is just getting tired, aren't they? They still went down. And they still went down from resistance inside of triggers. Isn't that crazy? My internet's going nuts today. I have connected and disconnected like 10 times during this classroom. Let's see if that works. Okay. Let me know if that works, Morgan. If tick data was it, or if Ninja Script. Guys, I'm out of pictures, and we have an hour to go. What would you like to talk about? Have I missed anybody's pictures? I don't think I did. I do sometimes. I never mean to. Sometimes I do. Let me scroll up and just... Pete, of course. Of course. Pete, I don't know why. But I always miss yours. Alright, so let's see what Pete did. I love this. That's alright. All the momentum in the world, the path is clear, and Pete takes the perfect momentum trade. And just absolutely beautiful. Absolutely beautiful. Ron, you had 5? Are you messing with me? I think we've seen 3 of yours. I'll find the other 2 somewhere. Momentum and path, guys. Easy win, Pete. Great. And then once again, waited for it to clear. JTFI. And get paid. Nice. That's where Ron would give you the chili dog emoji. 4 lot, guys. In at 86. Out at 71. 15 ticks. $600 trade. Can we see the timestamp? From 12:53. Oh, that was a long one. You did that in the afternoon. That was a 10-minute trade. That's why I don't trade crude in the afternoon. I can't sit in a trade for 10 minutes. That gives me both heebies and jeebies. All right, Andy, did we see yours, Andy? I feel like I'm missing stuff. Sorry, guys, I appear to be a little scattered. With confirmation, I sold the gap theory. Oh, Andy, are you in here? Andy knows this pattern because Andy's a chart reader. Guys, if price accelerates away from those large triggers and your large triggers are all the way down here at that reversal bar marker, this is the gap theory. And very often when you see this, price loves to come back and close the gap to those large triggers. Remember that thing we talked about on entries? Price returns to the large triggers. Andy says, check this out. With a reversal bar, with a little confirmation, and that's it, right? Wait for that confirmation, and you take the first profit, and you didn't completely trust it, but you got the second profit. Quick money. So once you know a pattern that normally says don't take the long, Andy's using it to take the short. Andy, that's awesome, dude. I like that you waited for confirmation. That's the part that makes me giddy. Because there was a time where you wouldn't. There was a time where you didn't feel compelled to wait for confirmation. You know what it was, is I think that scrambling to look at Steve's, I got a little confused. So I got 2 more of yours, Andy. And again, guys, if I missed your picture, let me know. It's never intentional. Nice momentum, weak bottom, divergence prints, no trade. Over a whole year. That's all right. We're just getting started, Andy. So 50-50 trade with divergence. Your rules say don't do it, and it kept you out of a loser. It doesn't have to be difficult, does it? My plan says don't take the trade with divergence. My rules weren't met. I chose not to take the trade. It had the potential to go up, didn't it? But his plan said don't do it. That's kind of what I was getting at on those earlier pictures, guys. You'll always find a reason. Trust me. You'll always find a reason. You'll add a chart. You'll add a pattern. You'll add a trigger look. You'll always find a reason, whether it's for or against. And the easiest way to circumvent that is to simply follow your plan. Andy, great trade there. And then that's the best of the best. We'd have to fight at the bike racks if you missed that one. That's beautiful. Odds favorable, clear path, perfect entry, right to the target. Nicely done. Nicely done. Guys, if you're like me and you want to steal pictures, that's the one. Go find that one, click on it, steal the link. Put it in perfect trades. Like the world should be able to see that trade because that's everything you look for. That's the pattern. That's what I teach. Every day. I'm looking again to make sure I didn't miss something. Ron, we saw that one, right? Odds favorable, clear path, all the way to the fib. Absolutely beautiful. Momentum and path, momentum and path, momentum and path. Oh, not again. Momentum and path, momentum and path. Why does Mark keep saying momentum and path? Why does Mark keep saying momentum and path? Because Mark knows that once you understand momentum and path, everything else presents itself. Gary, I'm calling bullshit without a picture. I picture John Lovitz with my wife, Morgan Fairchild. Pictures or it didn't happen in this room. Pictures or it didn't happen. Marty, price clears. You were in at 45, which means you did not have room. You did not have room to a divergence high. You chose to take it anyway. And it worked out for you. Good job. Guys, you know that if you draw an arrow to the right spot, but you entered, the top of the bar was 41, which would have been right there, I think. That's a fast moving market, right? that's NASDAQ. That's NASDAQ. I can't see where your exit was, but actually it was at the pink line. So you took one off right at the potential trouble. So even with the late exit, you stayed smart. Nice job, Marty. Guys, that's it. NASDAQ's fast. I've been slipped on NASDAQ $200 to $300. There it is. Gary says, check it out. Oh, but he didn't talk about what he got stopped out of there. I'm trying to figure out what you did. I'm not sure. 1101. Are we at 1101 already? HVA, triggers roll, everything down. I'm assuming maybe you took the momentum trade? No, you were in at 40, so you were in all the way up here. Or 38. Yeah, I have no idea how you did it, but good job. Good job. Have no idea how you pulled it off, but great job. I know you had a reason. This chart is all the reason that you need. And I'm sure there's good stuff on the other ones. Good job, Gary. What'd you get stopped out of, though? This is one of the things about the classroom. I love to talk about my winners, but I don't want to talk about the one before it. Was it a same trade? Well, it looks like it ran pretty well. I don't have enough information to talk about it because I don't see an entry over here. It's okay. If you want feedback, you'll post in the room. You've been around long enough. I won't chase you to get it out of you. New users, I'll chase you to get it out of you to find out what you were doing. If you're one of my older users, one of my experienced users, one of my people that have posted, we're good. All right, let's do this one. Let's do this one. All right. So Gary and Jeffrey and Trinaboy, if you're still in here, looking for the rules to be met on the large chart, right? Strong triggers, no terminations. Do you guys see it? That's the key. Once you can see this and say it quickly, life's pretty easy. And everything says down on my small chart, and it's cranking to the downside. So I wait for the reversal bar. Let me push this up just a little bit. Having trouble getting to my little clickety-clickety thing. Woo, and there's my reversal bar. And at the time of the reversal bar, I go through the rigmarole, right? From the bottom of the triggers to the top of the triggers. Look at the gap. That's pretty big, right? Nice job, Gary. And then I refine it. Where's my area inside? And I go from that giant box to this little box. And look how that trigger's moving down while this moves up. Got to be a tick or two below it. And there was my entry right off of it. And down it went. And look how it changed from the time of the reversal bar to the time of entry. But we chased that mid band and made sure we didn't lose it. And guys, that was an easy winner. And where did my box end up? Right at the end of the tail. Once again, right at the end of the tail. This is how you're going to study it. Nobody's going to show me that one. Arrow correct this time. I love it, Marty. And you get in and you get out. Great job, dude. 4 weeks with the software. Once he learned momentum and path, life got pretty easy, didn't it, Marty? And guys, everybody's different. Everybody gets it at a different rate. Was there anyone in here? Here, let me show what a dummy I can be. Was anyone in here when you went to college? Did you pass college algebra? First try, no worries. It was easy. It was like village idiot math for you. Anybody? Too easy, right, Andy? I failed it 4 times. I failed college algebra 4 times. On the 4th time that I failed it, she gave me the credit I needed so I could go to the University of Houston and finish my English Lit degree. Guys, everybody is different. And we all see things differently. And you guys that see algebra effortlessly, there you go, Andy. That's great. I love it. I'm not one of those people, guys. I have to learn things, and it takes repetition with me. And I have to beat things until I can take something and turn it into a pattern. And I'm only saying this. I was thinking about this earlier. Everybody's freaking brilliant at something, right? Everything is see, I don't think so, Andy. For me, this is just a pattern. I don't have to do any math. I don't have to use the FOIL method. There's no expressions. It's just a pattern, right? But the same way you guys do your algebraic expressions, there's a method. But Andy, so let's think about it. The FOIL method, right? That's all I remember from algebra is the FOIL method. If you made it the Eufel method, it wouldn't work. Does that make sense? If you made it the Floyd method, it wouldn't work. Guys, trading is just like that. You have a pattern, and the second you change it, you can't expect the same results. First out in line, that's right. First outside, inside, last. I still remember that, Morgan. I can't do it, but I remember it. But what happens when you change the recipe, right? Does anybody bake? You ever made a cake and used 4 cups of baking powder instead of flour and expected the cake to be delicious? Yeah, me too. Maybe as recent as last night. But it's the same idea. But for whatever reason, people believe that with trading, you can change the recipe and get the same results. And guys, the recipe never changes, right? And if you use cheddar cheese instead of cream cheese, Gary, it wouldn't work. And guys, just for the record, Novak men suck at analogies. I want you to know that. It's genetic. We can't help it. But this is your recipe. This is your recipe. Learn it and follow it. Made enough for a chili dog? I love it. I made my green fees this morning. I'm going to go play 18 once class is done. I probably made green fees for most of the course, but I'm only going to pay for me. I need friends. Anybody here in Austin? I need someone to golf with. This is your recipe, ladies and gentlemen. This is the path to success. And no matter what you think or feel or want or wish or hope, this is how you do it. And in the plan, right? So when you hear me tell you you broke the plan, you change the recipe. And when you change the recipe, you can't expect that cheesecake to be delicious. Goat cheese in a cheesecake? I don't like cheesecake, so you could put any cheese you wanted. Do you guys remember when I said that fibs are where decisions are made? Look at the small chart right at the fib. How many times could you go short and lose? Does everybody see that? Does anybody believe it? I hope you believe it. This is why I talk about momentum coupled with a clear path and not just momentum. Guys, that is 1, 2, 3, 4, 5, 6, 7. 7 pivots to the upside. 1, 2, 3, 4, 5, 6, 7 pivots to the downside. 14 pivots in a 4-point range. With a car, you have to look at signs, lights, etc. With the cart, you only have to lean out the side and holler, I'm old and out of medicine. I love it. That's awesome. Snow alert for Chicago. 66 and sunny alert for Texas. More power to you guys that can do that. Snow. Ugh. If I don't have a snowboard snapped to my feet, I don't want it. All right, let's see what happened. Girlfriend's account. Strong top. Triggers rolled. Odds favorable. Down separated. Did the jump in? Didn't work. Out break even. Did the jump in again? Why not just do the trend trade, Pete? Can I use you as an example that you don't need the example for? Because I know that you know this. Guys, there's a lot of people that just jump into the freaking market. Just jump in arbitrarily. The easiest trade with this look is always from the areas inside of triggers. There's a time to jump in. Right? There's a time to jump in. Not with your small triggers up. That's not the time to jump in. That's not momentum to the downside. Right? And there's a time to get out. Not with every trigger down and strong. Just before an area inside. Guys, it's not hard to confuse one trade for another. It's the same way I told Morgan. Sometimes you get so excited about that white bar trade. You get so excited about going counter trend. Morgan, I haven't seen a trend trade from you in I don't know how long. But I see all the white bar trades, right? Did you forget what the easy one was because you're chasing the next one, or are you just not posting them anymore? And sometimes we goof, Pete. I've done it. The goof happens. Sometimes we don't manage the way we should. I did it this morning. I went back and looked at it. I was like, holy crap, that loser was way bigger than it needed to be. And we do that, and that's a part of it. That is a part of it. She's happy, new pair of shoes. I love it. I love it. You get the Porsche. She gets the new shoes. Smart man. Keep that path going. And Morgan, and again, your plan can be your plan, absolutely. Trend trades are the easiest trades in the world, guys. My plan is 100% trend trade. That's it. 100% trend trade. And I can hit my goals nearly every day with 100% trend trades. There are more trades for you guys that need to be busy, but it's about getting paid, right? It's about making money. It's about being consistent. It's about finding more wins than losses. They're way easy on the psyche too. But Morgan, it's not as sexy. Everything said down, there was nothing in the way. Pfft, anyone could do that. Watch me fight shit to get in at the very top. And if it works on the 5th or 6th time, I look smart. Guys, there's people that hate the thought of the market moving without them. Morgan, I don't think you're one of those people. There's people that can't stand the thought of the market moving without them. And they don't see that, and I don't know. I don't know that it does. It might. There's people that see every tick they're not in as a loss. That was my money. That was my money, right? Yeah, there's nothing wrong with learning it. What's your win percentage on it right now? And this goes back to where Irish MKC was talking about doing the chili dog on gold, but it only had a 30% win. So if you're only taking 20% wins on it, it might not be your best bet. And I want you guys to remember something. You guys that take that white bar trade, it's a great trade. It's a great trade, Morgan. That's a John Novak trade. And you've never sat down and had a beer with my brother. My brother, in this nonsense right here, could find 7 trades and make money on every one of them. He's that good. So as you go through this, make sure that you are 100% on your rules being met on that trade, because you don't have the advantage of being able to manage that trade the way John Novak does. And that's why I stopped taking the trades that my brother takes. My brothers and mine, we read the charts the same. We go through our chart reads, and I'm like, oh, no more long trades. He's like, I'm short. I'm like, what the actual? He's like, well, I've got this and that and this, and that's just one of my trades. And I'm like, oh. And it's terrifying. It was even more terrifying is sometimes we go opposite directions at the same time, even though we read the same stuff. So do what's easy for you. I guess that's what I'm saying. Do what's easy for you. I like the white bar trade. I think it has a ton of value. I really do. I don't know how often it sets up truthfully, though. More on the NASDAQ, just because the NASDAQ bounces off of lines more. That was odds favorable and a clear path with a pullback to a mid-band right at the triggers. Just saying. That was odds favorable, clear path with a pullback right to the area inside of the triggers. Just saying. It does go fast, Morgan. Well, and this is where, like, if you're trading the NASDAQ, you're like, okay, I'm at a termination condition. I have to start if then. If it breaks, maybe I look for the momentum breakout. If, because I hit this area, I get what I need over here. Nope. Smalls are through. The white bar trade is out. So now my next trade becomes the potential of trading the breakout with the down up bar. So you'll get to the point to where everything is anticipatory. Everything is anticipatory. Whoops. And now that trade's off. So now my next trade becomes the pullback to here if I get it. Right at the triggers, tail end of momentum, didn't reach the target. Ooh, but I'm on the wrong side of my triggers. What do the rules say? Doesn't John Novak have rules for the white bar trade? Hold on. Wait a minute. You know I've got everything, right? Where did that go? That was a PDF, wasn't it? Hold on. I lost it. I just dropped it in the room, though. Here we go. There it is. So if you're not sure, you got to ask. White bar, momentum, or HVA, termination. White bar trades have good bottoms or tops. HVA not trending past the area. Double momentum. 24 to 28 tick maximum. Trailing stops, HVA, outer bands, continuing higher, lower, 2 consecutive bars, market flow patterns. So there's all these things. Oh, here we go. Let's see what this says. When the highest bar is white, sell the second bar. It doesn't tell you where to put it though. For me, it's a couple ticks above the HVA on the white bar when I was taking them. Generally, the one up, one down stop method. Thanks, Gary. So what does that mean? Appreciate that, Gary. Sometimes you guys have the answers. I don't. So the one up, one down stop method. Let's see if we can find one. So, so I'm in right here. If I'm in right here, my initial stop, Morgan, is where the second up bar forms. Does that make sense? So 2 bars against, I'm out. Otherwise, it has to go down. So off the bottom, let's say hypothetically I'm in right here. If I get 2 down bars, I'm out. And that's just a crazy strong trending market. So let's see if we can find one that failed. No, not 2 entry bars. Hold on, let me find. I know a guy that posted. All right, Morgan, let's talk about stop placements. Give you a little baseline here. All right, so here's your white bar, right? We'll make it not white. There's your white bar. There's your entry bar. You with me so far? That's where it should have been. So this bar right here, after you enter at the pullback to the triggers, Morgan, initially, the box around it is right here, and your stop goes above it. As this bar goes down, so does the box. I trail my stop behind it until eventually my stop's right there, 2 ticks above it. Or a tick above it. Does that make sense? So if I'm in right here on a white bar, I'm going to force it to make another up bar. That's what the 2 bar means. Cleared, room to profit. We saw that one. You're full of beans, Marty. That one was stuck to your clipboard. That was the first one you showed. Did that make sense, Morgan? Trying to see if we can find something real life. So here, this is hypothetical. Rules aren't met. If I jump in,
Order submitted.
if it comes and gets me, right? So we'll just let it get me.
Order filled.
Right now, my stop has to be below the white bar. That's kind of big because I didn't wait for the pullback. If I get a down bar, my anticipation is that the next bar is an up bar. That's what I'm hoping for. So we'll see if we get the down bar. And our entry should have been closer to 46, but we just jumped in for fun of it because we're watching structure. And watch, this is the one that won't do it just because we're trying to make an example out of class. Dang it.
Order filled.
We'll wait and see if it gives a down bar. That'll be easier. It's not going to. Well, lost that one. Oh, you know what? I was looking at the wrong spot. You're responding to me, and I'm looking at something from 2 hours ago. Do it! So if the rules are met, that would be your entry, right? Right about there at the HVA on the pullback, maybe a tick above. There we go. So now we're in. Whoops.
Order filled.
Okay, so we're in. So my stop would be right there. Where if this makes a down bar, I'm out. And let's see if it'll go up a little bit. It may not. Because that's a short, this isn't the right trade. That's what I'm willing to risk. I'd like to see it go up like 10 ticks. Because then I'll show you exactly what I'm doing with that movement. But trading directly into a fib when everything says down, what's the likelihood? I got a way better chance of getting stopped out than I do it going up. But you never know. Maybe for the lesson. That's it. Go up, box. I need like one little fight. And again, this doesn't fit the rules at all. All right. Come on, give me 5 or 6 ticks. So there's the bottom of the box, right? So now it goes up a tick. I'm up a tick. Nope, I don't. Once this goes up, I have my stop in place. There we go. There's my stop. If I get a second up bar, especially on one of these trades. So now I'm down to 6 ticks risk. If I get a second up bar, I can trail behind that. What's the expectation from here? Let's say the mid-band's the expectation, right? Or, Morgan, I can say, crap, I just hit resistance. If they give me a down bar, I'll exit this trade because I don't have a clear path. So as long as they don't give me a down bar, I'm in this trade. Still going. If they give me a down bar, I'm out. They haven't. And at this point, I'm kind of clearing the problem and looking for the next one. I would probably keep my stop a tick below this. And I would just say, all right, that's where I'm going to exit. Does that make sense? We broke the rules on the large chart, but that's exactly how I'm going to move my stops in something like this. And the reality is, with these all the way down here, with Fibonacci resistance, a reversal bar would be enough to get me out.
Stop fail.
Because that's a term, and my smalls aren't even above this one, and my large triggers are full bar away. And no matter what happens next, I'm good. So I would go, initially, I follow this one up. And then after 2 consecutive bars, I'm right below it. And then if I'm hoping that the area breaks, but it's not a clear path, that's when I say, all right, reversal bar takes me out. That's the most basic way to do it. And at this point, I mean, there weren't rules met anywhere, but that's about how I would work it. Cool. And then you just have to practice it. Do a little market replay, work through it, and practice it. But I mean, that's a tough long to take, and especially a tough long to hold. What do you want to talk about, guys? Small class today. I think it's going to get smaller tomorrow too, to be honest with you. People are about to go on vacation. I am too. Do you guys have what you need to study over the next couple of weeks? You can do market replay. The market's going to be open. Flying out. What part of Texas you going to, Morgan? Ooh, I'm sorry. Did you lose a bet? Is that where the in-laws are? Nice, dude. I know you have big plans there, so I'll be thinking about you on break. Can't wait to hear the good news. El Paso's pretty. Are her parents military? Is she military? In El Paso, you're either military or Mexican typically. All my friends that have been from there, okay, have either been one or the other. There's not a lot of in between. Met each other in DC? Nice. That's so cool. I had a really good friend. He was stationed in El Paso for a while. Went out to visit him a couple times. It's easy to get in trouble there. It's pretty though. All the mountains. When we left Big Bend National, went through. Good time. Guys, what would you like to talk about? What's on your mind? It is pretty cool out there. Potential to break. Not from a good top. Big old split triggers. It's a tough look. Broncos, Gary, is it easier today than it was yesterday, I hope? Yeah, but where's it going to go from, Morgan? Didn't go from that fib. Doesn't appear to be going from the mid-band. Is it going to be the fib? Is it going to be the one-to-ones? Hell, I don't know.
Order submitted.
Couldn't I say if it gives me a reversal bar off the area, I'll take it? But let's be honest. It's from a bad top.
Order canceled.
I don't expect that 50-50 to work. And waiting for confirmation just kept me out of a loser. Once you know your plan, guys, trading it's mindless. It really is. It's either your trade or it's not. But until you know your plan, it's difficult. Right now I have odds favorable momentum and a clear path, and I've got areas right inside of triggers. All I need is a pullback before it hits that fib. And just like that, my trade's off the table. Bummer, huh? That's how quick it goes. Ooh, now I have the potential to break. I still have areas.
Order submitted.
My plan says no divergence. So that's my next trade. If divergence prints, I have to cancel my order, but I don't even have the potential for it. There's my reversal bar, tick above the mid band. It's only the potential, and those didn't really smash through, so I'll have to watch this one. Have to manage it. We'll see what happens. I have my KISS plan in there. Not going to get psyched out by the fluctuations, but I'm not coming from a strong bottom. And sometimes that's problematic. We'll see what it's doing. Morgan's like, white bar, I'm leaving. I'm in, I'm short. But guys, this is how long you can have to wait. And it may not come get us, and it might run us right over. I don't know. But it has been a crazy uptrend. And that's just a big old trend trade. Well, didn't get us. Morgan's white bar trade didn't work out.
Order canceled.
You didn't take it, right, Morgan, because you refused to fight strong triggers? Hold it.
Order submitted.
Are they coming back for me? Yeah, see, good recognition. And Morgan, that's kind of how it begins to work.
Order filled.
There we go. Let's see. Stop where the market shouldn't go. First one at 100. If I get the reversal bar, then I'll reduce my risk. If I don't get a reversal bar, I'm going to get stopped out. Does it make sense, guys? One, two, three, four. That's my stop. That was my entry. There's my first target. But it's a 50-50 with divergence. And that breaks the rules. Is this odd that on the M6E that's all the bars since midnight? I don't know. What is the M6E?
Stop filled.
Euro futures. That's it. That's all the movement yesterday. That was all the movement on the 15th. That was all the movement on the 13th. Ooh, that was a big day on the 12th. Yeah, Kurt. Why are you watching this market? It doesn't do anything. I mean, it doesn't move. Look at all the markets, but man, if they don't move, we require movement for trades. We require patterns for trades. So yeah, I guess that was pretty normal for it. Bad bottom goes to the next area. We see that a lot, don't we? Bad bottom goes to the next area. We see that a lot. That's why a good top or bottom is key for so many trades. And I think I turned my S&P into a crude oil chart. Whoops. There we go. There we go. And that, ladies and gentlemen, is why divergence says don't take the 50-50. That's why divergence says don't do it. It's the number one killer. What else we got, guys? We're going to throw it in 10 minutes early. How is it a trend trade? It's a momentum trade, Gary. Breaks, snaps back, breaks, snaps back. It's a beautiful momentum trade. Beautiful momentum trade, not a trend trade. Who cares what you call it though, right? Who cares what you call it? You had momentum, you got the up, down bar. There we go. Nicely done, Gary. You guys know the money doesn't impress me, right? When you're like, but I won. Let's watch this.
Order filled.
That's probably the wrong trade. But look at all those numbers.
Stop filled.
Oh man, I just lost $5,000.
Order canceled.
Probably.
Order filled.
$7,000 I just lost. Doesn't matter, guys. It's simulator. Right? The key is to be able to do the same thing over and over. The key is to be able to make money each and every day. So that one $600 trade, I like it. Makes us feel good. But guys, what impresses me, what revs my engine, is when you guys say, hey Mark, look how I followed rules. Look how I traded a pattern that's been proven to win more than it loses. Look how I entered the market with a look that is going to work more than it doesn't, that gives me the opportunity to make that $600 effortlessly day in and day out. That's what gets me excited. Gary, your look on your charts, I love it. That $600, I won't see a penny of it. Doesn't matter to me. But that look, breaks, smalls break, snap back, confirmed on both charts. That is a rock star momentum trade. That's what I'd get excited about. I'd get excited about following the rules. I'd get excited about taking the right trades. I'd get excited about managing it correctly, because that's what's going to pay dividends for the rest of your life. That one $600 trade, you won't remember it this time next week. But if you remember the pattern that produced it, teach you to fish, give you a fish. Ooh, I'm behind the pulpit now. Look out, guys. Good day today. I'm going to end the YouTube